What's going on, everybody? It is Monday, January 6th, 2025, day log episode over NQ. So this is going to be the first one that's public again since last year. I appreciate everybody that was on the live stream today. Felt good to be back. Um, if you enjoyed it, please try to share it as much as you can. If you do have any social media or stuff like that, I would appreciate it. I would like to get back to where we were at last year, but I believe we will. It's going to be the same schedule as last year. I mean, only thing I'm really doing differently this year is really posting an annotation on Twitter. Today was really only one because I think that was the best time frame, the best annotations I could make out of it. Some days it may be more charts and maybe more annotations, depending on what I'm looking at. But those are really good to study. I usually don't make in-depth, detailed annotations like that because of time and experience. You'll get there as well, I believe, is you get to a point where you just have naked charts. So go over to my Twitter if you haven't already. I think it'll be a good place to study alongside the daily logs, the live streams, and then Saturdays I'll be doing a psychology pod, basically a podcast every Saturday. So I think all in all, that's basically all anybody would really need. I think the most learning comes from these daily logs, and people sleep on them. People don't view them as much as the live streams, but the people who are real, who are here listening to me make these daily logs, I think they're the most compact as far as content and education. So definitely try to take notes, do the best you can, and let's get into it. So based off of yesterday and the weekly forecast that was done, I was leaning towards looking at lower prices, which I still do lean towards that idea this week, where we can see lower prices. And now, why is that? Well, we looked over dollar index, we looked over bonds, yields, foreign exchange, we looked at the SMT at the highs on the higher time frame between NQ and ES, and all of those were directing the idea of potential lower prices. Um, when you're looking at those things right there, that's a good recipe to find one side and stick with it. Um, I love this idea of sticking with one side and sticking with it because it prevents the idea of over trading. It prevents the idea of going into multiple trades where you don't really know what price is doing, or you may see a model on one side and it really isn't a true move. Um, and that for me has always helped. So the only thing I can say countering a bearish idea is on the weekly time frame here, this buy side imbalance, which is resting right here, plus this order block would potentially prevent the idea of lower prices because we've gone into it now once, twice, three times, and even into this bullish order block, which the dotted line is the mean threshold, 50% of it, and we rejected away from it. Um, Anytime you spend a lot of time inside of a certain area, um, it can mean that price may be struggling to utilize that certain PD array to move in that direction. So since we've spent multiple weeks in here so far, and with the other confluences, not just this alone, with the other confluences that I just talked about, I could see the idea of where this ends up failing and where this ends up being closure underneath this buy side imbalance. Now, utilizing the other time frame, which would be the daily time frame, we can see here on the daily time frame that we talked about where we've gone up into a premium. So from this dealing range high down to this low, we've gone up into, which is optimal trade entry, which is 62% and 71. Anything above equilibrium is a premium. So we've gone up inside of this premium and inside of this sell side imbalance. With that, there's also this up close candle, which is your bearish order block. So order blocks can be a consecutive up close candles. It could be one singular up close candle. I would go over to ICT's channel and go to the core content section. I believe it's month one or two where he goes over order blocks in depth. But that's there in Confluence. And look at the way we close today. The bodies tell the story, the wicks do the damage. So we've what ICT would classically call it is just mohawking above the imbalance, right? Imbalances can have these type of wicks above it. As long as the body closes within it or beneath it and it's respecting it like this, then that is showing to me that there's still a case or evidence that price may want to seek lower prices into these lower objectives beneath price, right? So um, I'm still standing on that idea. I stated that, I wouldn't have preferred it to go up into this premium because I wanted to see this as a breakaway gap, meaning that even when we opened, I would like to see just kind of a drift away from it, but it's fine that it traded up into that. That didn't disqualify or disprove of anything as far as looking for lower prices. That's actually a good thing overall. If you look at ICT's weekly templates, if you're looking at a bearish week, you want to see Monday or Tuesday set the high of the week inside of a higher time frame area of interest, which is this here, and then see the rest of the week follow through to the lower prices. So it's setting the high of the week first, getting everybody to chase that higher, and then we sell it off the rest of the week. Does that mean this is 100% going tomorrow? I'm selling this? No. I have to see what price is giving me the evidence. It's the idea, and I have the confluences and the things on my side to look for that idea for lower prices. But if it doesn't give me that, or it doesn't give me a clean, sound model, then I'm not going to execute on it. I think this is where people trip up all the time is they see this and, they have all these confluences, but yet the model's not quite there, or they don't have something, they just force the idea upon it. You can't force it. You have to let the market come to you. When you see the model and the time's right and the things and the rules that you have set for yourself are right, then you execute it. Um, when you go into the 4 hour time frame, you refine that daily time frame sell sign imbalance. And why are we looking at this one? Well, again, when you're looking at this dealing range high to low, this is where the move started from that dealing range high up there. This is where the expansion lower, right? We have a lower low, lower high. We made a lower low. So just looking at basic market structure 101, we're going back up inside of a premium here, which a premium imbalance is there plus the daily time frame, right? So all this morning I was looking at this run higher and I was not willing to participate in anything higher because I was biased on this idea. If I was going to long it, then I would have needed a closure above these imbalances. Why? Because if we close above them, then that would indicate towards me that we're no longer respecting the bearish side and we would potentially want to seek the nearest high, which would have been here. That would have been the nearest buy side liquidity pool, which is resting here. When we go into the hourly time frame, you refine it to the same thing. This hourly imbalance right here, guess what we never did? We never closed above it. And that's why paying attention to wicks are very important. We never closed above it. We closed it in fully, and then we saw this drop away from it, right? So going into tomorrow, we'll see if we can see some lower prices out of this. That's what I would be biased towards. But if we don't see that, then I'm not going to force it. If you go into the lower time frames today, I think this is where you're going to find some useful studying. But let's just look at this hourly. I'm going to make this gray. But if we go into this hourly imbalance and we extend it out into like a 5 minute chart, a 1 minute chart, you're going to see that we never closed above it. And this is why it's important to keep in mind what time frame you're looking at. Like, let's say this imbalance. That's on the hourly. So even if a 5 minute closes above it, it's not as important. Or a 1 minute closes above it, that's not important. What's important is the hourly time frame, and if it closes above that, same with the 4 hour, the daily, etc. So I was stating today, and I'm going to kind of dual chart this for a second, is if you toggle on the RTH gap, which is regular trading hours, and sometimes you'll see me label it as the opening range gap, OPEC, I guess the acronym. And if you have the new week opening gap or new day opening gap indicator, it's going to plot this here. So from yesterday's close to today's open, that's regular trading hours where there's no trading done until we open, right? So this entire area is a gap that is not seen by most, I guess, majority of traders until ICT's brought it to our attention. So when you toggle that back to electronic trading hours, that's going to be resting right here. Now, why would I utilize this? Why would I utilize this today? Well, if we're going off of the idea, again, today that I was looking for lower prices, I was standing in that idea. The fact that off the initial open, which is here at 9:30, or a little bit before that, we had this initial drop. And during that time period, you're creating relative equal lows, which are resting right here. And why is that an interesting, I guess, time period to create something? Well, if I know I'm looking for lower prices and price creates relative equal lows before the open, and then they run it higher first, that is a good sign because that is a liquidity pool that they would want to seek. Plus, you have the opening range gap before that, before we traded down lower, opening range gap right where that liquidity pool is resting. So what we're doing is price is moving up inside of a higher time frame premium, right? This whole move higher is moving up inside of that higher time frame premium, which is the daily, the 4 hour, the 1 hour. It's expanding upwards towards it, right? Trapping a lot of people long. They're leaving liquidity underneath pre-open low. And now we have a liquidity pool to target. We have the opening range gap, which is a major draw on liquidity, meaning it's a huge magnet for price to get to, as a target to trade into, right? Plus everything else, all the preparation that we did with intermarket relationships, the higher time frame, all those things. This afternoon, I ended up taking a paper trade. Again, I haven't checked my email, but I believe I'm going to get access to live account, I think today or tomorrow. But I ended up taking a short in here. So the reason that I did that, again, the whole morning, I'm not looking for longs. And if anything prints, there's plenty of models in here that we can go over, and this is your homework. But if you look at this left side of the curve in here, and I'll annotate it, marking up order flow is a very key to your development, right? If you want to develop your skill set, then you need to be marking up all of these annotations so you can get this pattern recognition down. So if you look at this just at the open of today and what we did, you have this initial drop lower. Price runs higher and closes above an old high up here, right? If you look at this sell side imbalance, that becomes an inversion. So anything that was, let's just put this a simple way. It once was a sell side imbalance, and once we close above it, now it's going to turn into a potential bullish one. If price wants to expand higher, it's going to utilize that. So price closes above it. It shows that we're changing its state and delivery, meaning we're closing above that, and it's going to return into that, utilize that to expand higher. And what do? We tap into it, we utilize it to expand higher. This down close candle becomes an order block. In an order block, you can utilize the wicks, particularly the CE of it, or even the bodies. And here you can see the CE of that wick, which is this down close candle. Look at the bodies, respect it. We expand away from it. This wick makes a new high. This down close candle becomes another order block, or a propulsion block if you want to get technical. We utilize that, we expand higher, we come back down into it, we utilize it again, price expands higher. All this is just very lethargic price action. And the reason that you're kind of seeing that is because it's just slowly building itself higher to eventually drop it, because it's not really the real move. It's what we call really a Judas swing to meet. We have an inefficiency here, which is your fair value gap. We utilize it once, and really we didn't get into it. Mean threshold of that order block, utilize it twice again, and we expand higher, and we basically fully close in that hourly chart. Now remember, even on a 1 minute chart, you're closing above here on that. This is the gray shaded box, the hourly imbalance. Even though it's closing above on a 1 minute, the hourly never did. You can start to see here where we start to slowly break off lower, and you're starting to see, even at the highs, if you compare SMT with ES, you're starting to see shifts in market structure. So you're seeing shifts underneath these lows in here, right? All these lows are showing you that there's a shift in market structure, right? So in here, you have a displacement lower, shift underneath this low, showing it's changing from bullish to bearish. And you're confluencing SMT at the highs, which is a bearish divergence up here, and you're already biased on lower prices, and you see that price is digging up into that daily time frame sell side imbalance, the 4 hour, the hourly, which is the gray shaded box, so price is inside of a deep premium. That's the reason why you're looking for price to start turning, and trust it that it should start turning here, right? On this whole way up in here, there's nothing showing you any energetic displacement or any energetic displacement or shifts in market structure. It just keeps building up higher and higher and higher, and never shows you that it has willingness to go lower. So why I took my short, there's a reasoning behind that, right? If you go into now time is a very important aspect. If you go into the 1250, and I can make this even bigger, the 1250 to 1310, which is the lunch macro or end of lunch macro, or at least going to semi-silver bullet PM session, this little time window is showing you that this is a favorable time to start looking for a potential run to a liquidity pool, or at least take a trade. And I want all of you to annotate basically this run down. I want all of you to annotate a run up here and the run back down here. There's a lot in there that I don't want to do for you. I want you to post it, tag my Twitter, and that way I can at least look at it, give you some maybe points and tips, and that way I can review it for all of you. But I want you to annotate a lot of order blocks, inefficiencies, time, most importantly on a 1 minute chart specifically. So when we're looking at this as well, inside of here, again, looking at basic market structure, what does price keep doing? We just keep shifting lower, and we're utilizing any up close candles, which are your bearish order blocks in here. You're not seeing a whole bunch of inefficiencies. There's a bit of sloppy delivery. There's one right here. So this small little inefficiency. We're utilizing that in here. But even the up close candles, we're utilizing that. Price shifts off lower. Again, we utilize any of these inefficiencies. You can go out to a different time frame, and I bet it'll show it. We shift off lower, another shift to market structure. We have an inefficiency within time, right? What is time? The macro, even anything after the macro, as long as everything's favorable. And what am I aiming at overall? The overall target is looking for these lows, and I'm looking for the opening range gap to be traded into. And that can be 25%, 50%, 75, the whole thing. We only got to about, I'd say 40% of it. And utilizing other time frames during this period of time, you're utilizing the 5-minute chart. The 5-minute chart, these buy side imbalances now become an inversion. So you extend that to your right, and these become an inversion. And you can utilize that as soon as we break underneath it and we come back up into it. You don't want to see it trade back above it. You want to see it respect it and then drop away from it. And that's exactly what we did in here. We utilized it, dropped away from it. And that's the reason why I annotated the 5-minute chart, because I thought it was the cleanest of today. And even in Confluence, where I took my short, there's a 5-minute inefficiency here. So if you have layered or nested inefficiencies within, 5-minute, a 1-minute time frame, it's really good Confluence. So we move away from that, and we eventually draw down lower. And we didn't take out the low, but we did trade into the opening range gap. There's a reason why I took out where I took out, because if you look here, I took out at this low because we're already close in proximity to the sell side. I don't need to be perfect. And overall, it was really just a paper trade. So I just wanted to show it for demonstration. But in here, I want all of you to annotate the inefficiencies, the order blocks, the shifts in market structure, even annotating the 5-minute time frame, maybe even the 15-minute time frame, and maybe even the 30-second chart, and really going into detailed perspectives of it. I mean, I see a whole bunch of inefficiencies in here that, I may not be annotating, but I mean, there's one here, one there. These up close candles, all of these are bearish order blocks, right? All of these are up close candles, which become bearish order blocks. So what I'm doing here and what I don't normally do, like let's say on a live stream, is I'm not annotating these things. I see them with my eyes because I've done this for years on end of annotating price over and over and over again, to the point where I guess I don't even feel a need to annotate it because I see it. And it's almost just subconscious. It's just second nature to me. But as a newer student, and once as I was a newer student, these things did not come natural. I didn't know how to annotate it. I didn't know how to see it. So yes, I understand, seeing me do them is going to help you as well. But I'm going to give you breadcrumbs and things to learn from. That way you can put in the work and it's not just all done for you. Because if you put in the work yourself and you do it yourself, it's going to be a lot more meaningful and you're going to get a lot more out of it. So hopefully today was insightful. Hopefully it helped you. I try to do my best as a mentor and as a teacher to give you the best, education as I can, and kind of improve from last year. So hopefully you guys enjoyed today. Let me know in the comments below. If you guys want, tag my Twitter underneath whatever post. If you have chart annotations, things that you're, struggling with, whatever it may be, I'm always here to help. And until tomorrow's live stream, good luck and good trading, everybody. Be safe.